Hey, everybody, Economic Ninja here. I hope you're doing great. I am doing great. And the reason why I am with Joe Brown. Joe Brown, if you haven't heard of him, has an awesome YouTube channel, just as big, if not bigger. And I'm pretty sure it's going to blow past the Economic Ninja channel real quick if it hasn't already, because Joe's content is awesome. He has a channel called Heresy Financial. Joe, how are you doing?
Very good. Thanks for having me. And I haven't caught you yet, but I am chasing you with everything that I can do. I'm trying to surpass you at some point here, but you keep on inching just ahead of me here.
Well, and I got to tell the story because it's a really good story. We met in person in Miami. He had seen my channel. I had seen his. We had a great weekend of talking. I really like Joe's heart, to be honest with you. And I love his content even more. I want you guys to check out Heresy Financial because we're going to start doing some work together and we're going to start changing things up to bring you the best content possible. But first, I got to ask about the name, Joe. What does Heresy Financial mean?
Yeah, absolutely. So the word heresy, it's an old religious word that basically means an opinion that is profoundly at odds with what is generally accepted. And back when I first started getting interested in all of this, I was a stockbroker. I started researching for myself what was going on. I realized that the truth was considered heresy to the mainstream, to the establishment. And typically that's true. When you look back at like Galileo and he said, oh, hey, the earth goes around the sun, not the other way around, that was considered heresy, right? And so usually the heresy is what comes out as being truth later on.
That is such an awesome way of putting it, because I look at myself as a contrarian investor. I try to spot the trends before the masses, because that's when you make the most money, when you can buy low, sell high, but very few people understand that. And I love the way that you put that in words. So thank you so much. Now we're going to be meeting up in pretty, well, juice. It's like what, 2 weeks away in January?
2 weeks. Yeah.
Yeah. So we're going to be meeting in January on the 8th. It's a Saturday in Denver, Colorado. And we want to talk about that a little bit. And then we're going to get into some stocks where Joe sees the stock market and other markets headed in the next year. But we are going to be meeting Saturday, January 8th. The place is going to be, it's actually going to be let out because we don't even know where it is right now, right? We just know approximate area, Joe, right?
Right. Yeah. Union Station.
Yeah, so within 1 mile radius of Union Station on that day, we're going to be meeting. Subscribe. I've got the economicninja.org. You can get on the email list, or follow any of us on Twitter, and we're going to blast it out within 24 hours once we find the venue, because it looks like it's already starting to pick up, because we have another 4 content creators, like from Wall Street Silver and people like that. So we're expecting. We actually don't know, what are we expecting, Joe?
I don't know. Right now, it looks like, depending on the location that we get, we might have to cut off reservations. So if you're interested, sign up now so we can get a good head count, and we might be overflowing wherever we end up.
Fire marshal might get called.
Yeah. Yep.
Yeah. Well, so yeah, we want to interview you guys. We're going to be doing some content together as well that weekend, and we want to get your questions and give them as the best answers we can. So let's talk about 2022, Joe. Now, do a lot of people know of your financial or your professional background?
No, not really. So this is back when I first, got married. I was deep in debt from college. I just had no idea how to invest or save or budget or anything like that. And I was like, hey, look, I started reading some stuff, got really interested in it. And I was like, I want to go as deep into this as possible. So the only thing that I knew how to do is I was like, I'm going to go, get a job. And I was, good at interviewing. So I got a job as a stockbroker. Had to get all licensed up, got, every series there is out there. And
Wait, Joe, that's not a very easy task. I want to explain that to people. So it's like, I got all the series. Like, okay, people. So he was a legit stockbroker. This isn't someone that worked in Fidelity selling prepackaged goods, right? You actually were able to handle transactions of securities.
Right. Yeah. And I did a bunch of different things. I just couldn't stay put. I'm not built like that. And the more mainly it was driven by, I get bored and I want to learn something. I get very curious. So I move on to something else. And the more I dug in, the more I realized this doesn't make sense. Like, the reason why I have to sell bonds to somebody is because my license says, my employer says, this is what I have to say is safe, the most conservative. When you trace that back, it's basically because the government says that, but it's the government's debt that they're saying is the safest investment out there. And so started, I read a lot of the books and realized that, at a certain point, I couldn't keep on selling what I was selling, and went out to preach the truth.
That's so awesome. And so I want you guys to understand how I view Joe's, my main competition. And I do that because it's good competition. I mean, I love what he's about. He has amazing, phenomenal content. And I told him, I said, I want to use you as motivation. And like he said, he can't just sit around and do nothing. And that's how I am too. And so we want to keep iron sharpens iron. And so as we start to work together, we really want your guys' comments of how you like, if you like or dislike the way we're going to start flowing and trying to bring you the best information possible on YouTube. So with that being said, I'm going to do a shameless plug. Subscribe to Joe's channel. I think it's awesome. Heresy Financial. I'm going to put a link in the comments below. So let's talk about 2022, Joe. What do you think is going to happen?
2022. Right now, I think we are witnessing a melt up and the final stages before a collapse, because the Fed is basically pulling the rug out from underneath asset prices right now. When you have an economy that is so fragile that it needs the monetary base to expand by 25% just to not crash, then it starts to explode upwards as a result. And then you start to pull back on the monetary expansion to the point where it's fast. It's like, right now, the main goal is to get inflation under control. And so they are tapering their purchases fast. They're going to start raising interest rates. Somebody's going to be insolvent. It is going to knock over a chain of dominoes, and they're going to have to reverse course. And so this year, I think we see melt up, crash, and then more crazy monetary policy than we've ever seen.
So I completely agree with you, Joe, but have they actually started tapering yet? Or is this more of a threat right now?
This is okay. So it depends on whether you are going by their definition of taper.
Yeah.
Taper, that used to mean sell assets off their balance sheet. Now taper means reduce their purchases. So all throughout the last 15 months, they were buying $120 billion worth of assets. November, they said we're going to start the taper. They bought $75 billion worth of assets. Everybody was like looking at last week, their balance sheet popped up. But what they don't realize is the balance sheet does this as they grow. They buy and then sell, buy and then sell. So December, they will not buy $120 billion of assets. It'll be probably around 75 billion. And they'll probably stop buying assets. I think they'll be able to stop buying assets before everything crashes.
So it's interesting because in 2015, they started releasing things off of their balance sheet. Now, like you said, Joe, it is like, we're just not going to buy as much. To say that we are in collapse is the understatement of the century. And what blows me away is that it's all world governments at the same time right now. And it's interesting what happened, a couple of years ago and caused the economy to shut down was almost like at the perfect time, because we saw a massive crisis in the repo market in September of 2019. Most people don't understand that. And to compare that crisis when we saw, oh gosh, I want to say 10.5% it spiked, maybe 12. I'm going off my memory, as compared to 2008, the Lehman's crisis, and right after September 11th, when the terrorist attacks happened, both times the repo market spiked to like a little over 6%. So it almost came at the perfect time. It's weird, but that's what blows me away. So let's keep going on with this taper thing. Do you think they are actually going to raise rates as part of their plan this next year?
I think they will be able to get to that point before things crash to the point where there's so much economic pain they have to reverse course. But remember, if you look at the federal funds rate for the last 60 years, we saw the big spike when Volcker was in charge. It peaked out in 1980 at like 19%. And then it's been coming down since then. You can basically plot a line on that, like do charting, technical analysis on the federal funds rate. And you can see there's only a limited amount that it can go up before it hits that point where the economy starts to break and they have to drop it back down. So I think they'll maybe be able to raise it 2, maybe 3 times. And they're going to try, they have to, because of what's happening with inflation right now. They have to look like they're trying to fight it. And then the amount they're going to be able to drop it from there is so little that they're going to have to do a bunch of other stuff to fix the problems after the crash.
Ooh, maybe throw in an Operation Twist in that.
Yeah.
So check this out. This brings up a really good point that I was just thinking about. Like you said, you believe they're going to do something that's going to be short-lived and they're going to have to reverse course or spin it somehow. This reminds me of what happened in 2015. They actually came out with a dot plot plan. And they said, we're going to start raising rates. They did it very gradually. And by 2000, and I want to say it was 18, there was a special warning that was put out the 1st or 2nd of October and saying the Federal Reserve is going to collapse the markets if they keep raising rates. Now, at that point, and again, this is all off of memory, I believe the Fed funds rate hit around 2.25%, possibly 2.5%. And what happened is the stock market had an initial drop. The Dow dropped, I want to say 19% in the period of 90 to 120 days from October to, I want to say Christmas Eve. The Federal Reserve came out and said, we are going to stop raising rates. Okay. So back then they were able to move that needle, 2+%, right? Or points. The point is though, is that was the shortest period from a Fed raising policy to a Fed tightening policy. And what they started doing is, or not tightening, but loosening, because from December, I believe it lasted less than 1 quarter until the first rate drop. And that blew me away. And back then it was 2.5%. Where do you think the Federal Reserve is going to be able to, what is that ceiling that you're talking about as far as Fed rate hikes? What do you think they could get to before things start to crumble?
Probably 2 or 3 hikes, and they're only going to go 25 basis points at a time.
So what, half a point, 3/4 of a total point? Yeah. That's not much at all. I mean, that's an increase though of 200-300%.
Well, yeah, exactly.
Isn't that crazy? So if you think about all the debt that's being serviced right now, what's really scary at adjustable rates, it will eventually affect, and I want people to understand that the Fed funds rate does eventually affect all debt, because banks and lending institutions balance risk. And eventually they go, well, why not keep our money on with the Fed? So if they do that, as the Fed raises rates, other rates end up increasing as well, correct?
Correct. Yeah. I mean, there's so much more to get into with this conversation. We could talk for hours here, but 100% absolutely. And even if it's not adjustable rate, as the fixed rate comes due and matures and has to be rolled over because there's not enough cash flow for it in the economy to service the debt, it has to, it will break things. There's just no way around it.
Yeah, and we want to keep this video short, and we want, again, your guys, everybody that's watching this, and please, guys, share, if you like this video, share it everywhere you can. We want to get this message out, but we also want your input. Let us know if you like this topic, if there's something that we sparked and started talking about that we didn't finish, because I know we are going all over the place, but we want to get your input, because I think that's the most important thing. Joe, in closing, is there anything you want to talk about as far as what people should be watching for this next year, 2022?
Yeah, like I can't remember actually if we were talking about this on my video that'll be on my channel or this video, but we were talking about gold and silver, how they kind of they're kind of like a canary in the coal mine. They're kind of an advanced warning of some things about to break, and you can watch them front run some things. And I think as we start to see this consolidation in precious metals end, we start to see some things in crypto happen. There are lots of things to be watching, but all eyes are on the Federal Reserve right now. All eyes are on the Fed, and because everything is inverse of what they do. It's all one trade now.
That's great. And I'm glad you talked about front running, because I believe today we popped up over $1,800 for gold. And that's a pretty big cycle. If we can close above it, it's a pretty big psychological number every time we hit around numbers. So we'll be watching that. All right, cool. Well, with that being said, I appreciate you coming on, Joe, and I can't wait to see you in person and just hang out and get that great content going in January in Denver. So again, guys, if you want to see that, first off, I'm going to link the website where you can sign up for the email blast showing you the exact location when we find it, but we know it's within 1 mile of Union Station. Also, I'm going to link a video from Joe's channel, and I want you guys to check it out. Subscribe to him. You guys have been following me for a long time. Why don't you check out someone that's a lot brighter than me, in my opinion? And I don't say that lightly. Thanks, Joe, for coming on, man. I really appreciate it.
Hey, thank you so much. We'll see you soon.
All right, man. Well, with that being said, guys, the Economic Ninja is out.